Good morning, everyone. Welcome to our live market outlook, first session of the week. Today is Monday, 19th of September 2011. As we can see already, a lot of activities in the markets overnight, mainly due to, as a result of unsuccessful, I would say, the last financial ministers meeting in Poland, and the immediate reaction was actually the risk aversion was the dominating factor at the beginning of the trading week in Far East, as I said, the direct result of disappointing outcome of the meeting of Eurozone finance ministers, and Greece as the worst, currently the number one problem for the European Union, and actually some more pessimistic news came out. The Financial Ministers Summit was actually disappointed with no results and no new measures agreed upon, and it seems that the present U.S. Treasury Secretary Tim Geithner, who was there also as a guest, did nothing but antagonized his EU counterparts, as they were mainly upset for pardon, as they said, he was not the one to give them a lecture, as the situation in US and their crisis is far deeper and far more serious than European one. This was stressed by Austrian finance minister. Also the German finance minister said, and the Trichet also was antagonizing the comments from the Geithner, who actually was calling for action of those who can afford paying. Number one, of course, is Germany, the main paymaster in the European Union. And basically the Geithner's appearance was sort of support, but it was in a way rejected by Eurozone officials, telling him more or less clearly to mind his own business, and they will try to handle the Eurozone problems on their own. So as immediate reaction, the euro was lower, with the gap lower opening this morning. The same with the cable. The Swiss dollar was opening higher. Gold is back into positive area after disappointing losses during the last week. And crude oil remains under pressure, as increasing signs of increasing crisis are triggering direct fears for possible lower demand for the energy. Also, the important and actually the event of the week will be Fed's meeting later in the week. The Federal Reserve actually is facing global financial strains and recession fears, and is poised to increase downward pressure on longer-term interest rates, and in a bid to accelerate slowing U.S. recovery. They have one eye on escalating debt turmoil in Europe, and another on stubbornly high the unemployment in the U.S. that remains at 9.1% rate, and their meeting starts on Tuesday, I think September 21st, yes, on Tuesday, when also there will be release of, 20th starts on Tuesday, tomorrow, and it's 2 days. This is the first time of 2 days meeting of the Fed, and the release will be on Tuesday late trading hours at 6:15 GMT. So all eyes are actually turned on the Fed and their measurement. Actually, there was saying that are not going to be any shock therapy, but just try to heal the current situation in the U.S. No calendar for today, nothing, no significant events due to be released today. So let's now take a look on the technical part, as I know that most of you is waiting for this. We are starting with euro. Okay, we can see that the last week actually the performance was excellent. The euro gained from 135 to 139.35. This is the significant one week gain seen not seen in past couple of months, I would say. However, the corrective action on Friday was in a way supported at 137.52, but due to the fundamental news, disappointing news from the Eurozone finance ministers, triggered the lower opening or higher opening for most of the instruments. So we can see that euro-dollar opened nearly around 90 points lower from the Friday's closing, and extended the downside to 136.44, where temporary support this morning was found. The near-term outlook, as we can see, remains now. It's turned more to the downside, and the immediate focus comes at 135, 136, 135.90, which is the previous low of 14th of September. Also significant is the outcome of Fibonacci retracement of the latest uplift from 135 to now 139.35, with the break below 61.8% now, turning focus more to the downside, actually weakening the current outlook. At this point, we have immediate resistance at 137.13, which is overnight high, and also on hourly chart, 20 days moving average at 137.27. So around 137.20.30 is our initial barrier zone. The levels we are going to watch. On the upside further up, we have 137.52, the low of last Friday, and this is another significant level. Basically, I would say a regain of 138 zone would be signaling some positive movements, and possible to confirm the higher low at 130. It's not basically higher low, but to confirm the temporary bottom at 136.44 ahead of strong action higher. Meantime, I would say the gains should be capped by 137.20, 137.50 zone ahead of fresh leg lower, as the fundamental outlook also brings additional pressure on the pair. And on the downside, 135.90 would be the next level to watch in case of break of 136.44. A longer term outlook, however, on euro-dollar remains firmly bearish, especially in light of a break of below the channel support, the recent channel from 149.38, the May high, the peak of the euro-dollar, and break below the channel support at 136.30 now increases the downside pressure, especially that the pair lost the pair lost 200 days moving average, and the upside, the recovery attempt from 135 was capped just above 38.2%, so well below the 200 days moving average, which is in 140 zone, currently standing at 140.36. At this point, the intraday outlook maintains bearish tone, and below 135 we have 134.27. Next is the level from February 2011. A similar situation with the cable. Also gap lower opening at 157.29 versus the Friday close at 157.81. A bit narrower, but still more to the downside. The loss of previous low at 157.05, extended losses down to 156.83 so far, and the immediate focus comes actually at 155 zone, ahead of the lows of January, beginning of January 2011 and the end of December 2010 at 154 and 153.80 approximately. I'm not quite sure about the level. Currently, the pair is in corrective trading in corrective mode on oversold hourly studies, with initial resistance today's high at 157.55 being regained so far. The next level on the 4-hour chart, we have the 20 days moving average at 157.72, along with the Friday's lows. So we have the next significant level around 57, 70, 80, and to maintain the current negative tone, this should contain the corrective attempt. Also important is the main trend line resistance from 164.53 high of 29th of August that for now capped the corrective attempts from 157.05. It was limited at 158.40. 158.31 was the line at that time, so brief break higher and return lower signals that this trend line is still offering strong resistance, and I would say break above this, which is around 158 zone, would bring some more positive tone into the pair. Otherwise, the likely scenario would be lower top and extension of the broader downtrend of the cable with levels 156.50, 156 initially, and then we might be going into 155 area in the coming hours or 1-2 days ahead.